number. It was expected at 211,000. It came back at 210,000. The only other news events that we have here during the day is a nat gas storage. Now we're going to start off looking at the Fed Fund futures. And what you'll notice about the Fed Fund futures is that they're pinned right inside of the October meeting, October 27th, 2027 meeting. The markets over the last 4 Thursdays have had this pattern of selling off into the end of the week. And we were doing our pre-market analysis and thinking about what it would look like if that type of situation was going to happen again. And the one thing that is important to note here is that, yes, the indices have resistance levels that they're inside of. The VIX has its support level. But there's something that's much different about this week than our other previous 3 going on 4 weeks, is that by this time in the week, we had broken through our VIX 50% short, and we were already in an uptrend. We had confirmed our upside targets on the VIX and downside targets on the indices. So we are still in the sideways range when we're thinking about this from the perspective of the VIX. And what happens if the VIX breaks through this long setup here? We have to be prepared for this, because the long setups that we were inside of yesterday afternoon, they completed. You can see our high this morning was the target to this pullback that we were inside of yesterday afternoon. So would there be anything unusual about coming all the way halfway back from Tuesday, Wednesday's lows to highs again? No, there absolutely wouldn't be. So in the pre-market timeframes, what the pattern that we know that exists over this past 3 Thursdays is that we squeeze into the direction of the gap fill, and then we tank from that half gap fill or the full gap fill. And let's play devil's advocate here. Because this isn't the same as the last 3 weeks, could the VIX just fall right through the middle of the range again? So is there a possibility that the indices squeeze into the direction of a gap fill and just go right back up to the top of the range? Yes, that's a possibility. And that's why we've been viewing the bottom of this range in this way here. We're running right into the previous low, aren't we? Is there anything in the middle of the range? We're going to find out. There's 2 unfilled gaps, though, that are above us from this support level, from the VIX's resistance, from the VIX's profit target. And I think that it might be dangerous to make an assumption that this Thursday is going to be like the last 3. And we know why, right? Because we didn't break out of the resistance. We did not break out of the resistance. So I think that is probably the most important factor here as we're going into our Thursday morning, is that while we do have a template for the last 3 Thursdays, the last 4 Thursdays, and that we roll over and continue a sell-off into the end of the week, making that assumption before we've confirmed it in price could be dangerous. Now, in relation to gap fill statistics, we are in a pro gap down and go type of situation here. We're more than 30 points away from the previous day's close. And so let's talk about the other side of that trade here. Gap fill statistics are 88% for the half gap fill, and 81% for the half gap fill, and 83% for the half gap fill. That's over the last 180 days. Let's just round it and say it's an 85%. This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.